So most of Asia has been holding out in positive territory. Let's just get the SGX Nifty up for you as well. That's also been hinting at a mildly positive start. That's the picture for the morning. Yeah, about 33 points on the higher side. Let's now take you back to a lot of the conversations that we picked up from the EY Awards last night. Our colleague Priya Sheth also managed to catch up with Mr. Bhaskar Bhatt of Titan, who remains very optimistic on the jewellery business. Take a look.
I think demand is not, if muted January has many reasons, price of gold and so on. But, this is a good wedding season and wedding season will continue and Indians love gold, you know that. So overall growth we will achieve. We will achieve. Here and there, 1 month it goes down and then we make up in the next month. We have our ways and means of making up.
And 2019 is expected to be a year with more wedding days. So are you what tune are you expecting an increase as far as or the growth potential that you expect going forward?
2019 in jewelry we had talked about 25%, but we may end up with 23% overall for the year. With Q4, there's only one left. We do expect to achieve 22-23% growth.
We're at the we're going to end Q4 soon, and we're seeing FY19, FY20 play out going forward. What's your assessment in terms of targets that you have for the jewellery sector? In terms of growth, do you stick to the 25% kind of number that you've given?
25% will be difficult, but we will still grow quite substantially, particularly because we are gaining market share every month thanks to our business model. And therefore both same-store growth and new stores are adding to our turnover. But 25% every year is difficult. Market share improvement will happen.
In terms of expansion then, run us through what's the kind of expansion plan? What's your plan for FY20 in terms of what's the kind of growth that we expect?
We did 40 stores this year, maybe a little more. So it'll be the same in jewelry, but overall it'll be over 100 stores for all the businesses.
Talk to us about the watches business and the eyewear business, of course. What kind of ambitions do you have for the business going forward? I do understand jewelry makes up a major chunk, but of course a focus area has also been to grow these two segments.
Well, watches has been growing, as you've seen. It's become very profitable. It's hit its highest profits ever. And so watches is back in a way in the minds of people. Eyewear, we have this big target of 10 million customers per annum by 2023, and we are growing as well. So eyewear will get scale, and that's when it will become very profitable.
Okay, so 25% growth per year is something that's not sustainable. In fact, that's something the management told us post the numbers as well. But let's move on. Some weak numbers coming in from the banks. Deterioration in asset quality led to an operationally very weak performance in Q3 for Karur Vysya Bank. PR Seshadri, who's the MD and CEO of Karur Vysya Bank, joins us now. Mr. Seshadri, good morning and thank you for joining us on CNBC TV 18. Your gross NPA ratio has risen to almost 9%, 8.5% to be precise. Can you start by telling us what were the slippages in this quarter? Has it risen compared to what we saw last quarter? And what is your expectation in terms of asset quality going ahead?
Thank you very much for having me on the show. We had a reasonably good quarter actually. In terms of revenues, we grew 12% sequentially and 7% year on year. We had an operating profit that was marginally up on prior year. Our expenses were well contained, and so operating profit came in well, but we made very large provisions during the quarter. Approximately 430 crores worth of credit provisions were made, leading to a low net profit, as you said. The net slippage during the quarter was 349 crores, largely on account of names that are already in the public domain, which were provided for quite substantially. Going forward, we expect corporate related losses to moderate. We still see some signs of stress on our SME book, which we are working on. Our retail and agriculture book remain pristine, and retail continues to grow quite well for us. So we think that, as far as the challenges go, majority of the challenges have been cleared. There is a small task ahead of us as we go forward.
So, just taking off from what you said, Mr. Seshadri, since there seems to be some stress emerging in the SME book, What should we expect on the gross NPA front? This level of 8% plus where you've reached Q3, could it go higher? When does the reversal, I mean, when do you start sort of going down on the gross NPA level? And what does that mean for credit cost?
So, the way we've been articulating our strategy is that we want to build a portfolio that has a net credit accretion or NPA accretion annualized at about 150 basis points. We are a little way away from that. So consequently, we do expect our gross NPAs to continue to climb over the next couple of quarters, post which they will stabilize and we should start seeing them come off. We do expect fairly strong recoveries from the stock of NPAs that we currently carry. And that should start coming through maybe 2 or 3 quarters down the road. Some of the larger NPAs, of course, are dependent upon how the NCLT process actually plays out. So our own view is that while this is not quite the end of the high gross NPA number, the speed with which the gross NPAs have been rising will moderate going forward. We are reasonably well provided, and we will continue to increase provision coverage. Currently, our provision coverage ratio is about 56% the way the RBI calculates it, and about 41.5% the way the street calculates it. We expect that over the next 6 quarters or thereabouts, we should move up to approximately 60-65%, the way the street calculates it, at which point in time, the NPA problem that we are currently facing will be behind us.
Okay. I also wanted to ask you a little bit about the retail portfolio. You did mention that there's stress in the SME book, but what about the retail portfolio? Have you seen a further stress in terms of, housing loans, mortgage loans, etc.? And would you expect that pressure to continue?
We don't have any pressure on the retail book. Actually, the net accretion to NPA was less than 50 basis points, about 38, 39 basis points during the quarter annualized. We have a small retail book relative to our size. We were historically a retail deposit taker and a commercial stroke corporate lender. On the retail side, we've been growing the book. So we are now at 20% of our total book is retail. The retail book is holding reasonably well, performing reasonably well. The share of home loans, the largest book there is housing loans, and that is behaving exceptionally well. On the LAP side, we have a very small book. I guess there is a lot of chatter on the street with respect to how the loan against property portfolio will behave. But for us, that's quite a small component of our total retail book, and therefore not really relevant.
So finally, then, what is the outlook on margins? Where are you at the end of the third quarter? And what do you expect by way of transmission of the rate cut from the Reserve Bank of India? What does it mean for cost of money? What should we expect on spreads?
So with respect to margins, our net interest margin improved sequentially quarter on quarter by 3 basis points. That's roughly 1% increase in the net interest margin. From a cost of funds point of view, it's very tightly controlled. We are about 5.8%. We've introduced risk-based pricing, and therefore we think that we have some pricing power in the marketplace. The transmission of Reserve Bank of India's reduction in interest rates will come through over a period of time. Right now, credit spreads are elevated because of the incidents that have been taking place in the markets, and we expect that to sort of normalize maybe a month from now or thereabouts. At which point in time there will be a re-rating of risk, and the impact of these actions of the Reserve Bank of India will flow through.
Okay, we'll leave it at that. Thank you for joining us and giving us an update. So there's definitely stress in the SME book. Slippages have been elevated at 350 odd crores, but things are expected to improve over the next few quarters. Let's move on. SP Tulsian of sptulsian.com joins in now to chat with us about a couple of numbers that came in post-market hours. Mr. Tulsian, good morning. I wanted your thoughts first on Coal India. The realizations look pretty good this time around. Margins have also improved substantially. From an investor standpoint, any opportunity here?
Sonia, I think these numbers definitely gives you the cheer and comfort, but the only question is that can this be sustained? Because that is what we have seen the things, getting deceived, or, the investors have not been able to take a comfort from one quarter numbers. But yes, if you ask me, the numbers are seen to be quite good, and looking to the shortage and the demands for the coal going forward, I think that the current level justifies investment in the stock.
Okay. Mr. Tilsen, good morning. What about Sun Pharma? The stock's rallied from lows. There are one-offs in the numbers. But do you think it's a stock that you want to buy at current levels, or avoid right now, perhaps?
See, Anuj, again, looking to the numbers, I don't think that you have any kind of complaint, and definitely, again, you get a lot of comfort from the numbers. But can you just confine yourself to the numbers only? Probably, I would say no, because maybe the regulatory things, though the management have tried to, to be very, 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 try to clear the doubts and the apprehensions on the concerns. But I doubt that those things can really be, sufficient to calm the nerves of the investors, and maybe any regulatory developments, which are still pending, or maybe they seen as a hanging sword, won't get removed, or go away just in the near term. So maybe yes, if you want to play in the near term, and if you are holding the stock, remain invested. But otherwise, fresh buying, looking to the results, are not advised.
Okay, so that's a slightly cautious approach to Sun Pharma despite the good performance. Another good number, good morning Mr. Tilsen, another good number over the evening was of course Bata. What a performance even on the operational front. But the question is, can the stock keep marching forward and climb that valuation worry?
See, again, I think probably the Bata seem to have posted the excellent numbers, the best results, which you have seen post-market closure. Now you are right, and in fact the stock having risen, but the best part for the numbers are seen to be the expansion in the EBITDA margin to about 21%, and the kind of policy move which have been initiated by the company, maybe the opening of the 50 red concept stores, improvisations of the existing stores, to give a premium look, and introduction of many of the new products, maybe like the premium walking the things with the memory foam shoes and all sort of things. All these things are really seen to be working very well in favor of the company, and the change in the GST from 500 to 1,000 rupees is also seen to be playing quite well for the company, because their average realization per pair is about 570 to 580 per pair. So I think that, and even in all fronts, whether you take the ladies segment, or maybe even the upper segments of their hush puppies, all these things are seen to be doing quite well. So this is seen to be quite a comforting stock, because if you take a call on the FY20 estimated P multiple, it is ruling at about 42-43 times, which again looks not too stretched. So I'm quite impressed with the numbers, and you are right, maybe valuations are looking stretched, but things are still looking quite comforting as an investment in the stock at the current level after seeing these Q3 numbers.
Okay, still saying now what are your thoughts on a stock like Axis Bank now with the change of management, and now the stock hitting fresh highs, and there's this OFS which saw decent subscription at 700? How would you approach the stock?
So, in fact, the moment stock crossed 700, we have been in fact giving the profit booking advice call, and now with the Suti stake sale having come in, definitely the float will increase, and the appetite of the large investors got satisfied to a great extent. So I don't think that beyond a point, maybe beyond 710, 715, the stock holds much potential, because if you go on a relative valuations, maybe in case of the other private sector banks, more especially two banks, one is IndusInd Bank and second is ICICI Bank. I think that both seen having bottomed out. Maybe IndusInd Bank have started seeing the renewed buying in this maybe last 1 week or so. In fact, they hold the larger value. Obviously, HDFC Bank and Kotak Bank continues to remain our top pick. But if you want to pick and choose the outperformer, maybe on a relative basis in terms of the valuations, probably the ICICI Bank and IndusInd Bank looks good over Axis Bank now at the current valuation.
Okay, I also want to ask you about some of the broader market companies, the likes of Prestige Estates, etc., that reported good numbers, Mr. Tilsen. But I'll come back to you in just moments from now. We have Amit Gupta, ICICI Director, who also joins in to give us some F&O cues. So let's get them very quickly. Amit, hi, good morning. Can you take us through what your individual stock ideas are for the day?
Yeah, from the Nifty pack, we have Asian Paints because I think if you look at the setup in the stock in the last 2 or 3 series, it is really looking quite encouraging. If you see in comparison to the last series, the open interest has come down by almost 18%. So which means the shorts are getting covered above 1400 levels. It declined towards 1400, but you see the move from 1400 to 1450. It was really sharp on the back of this closer. And this is one of the beneficiary of lower crude oil prices. So my sense is that kind of positional short positions which were there in the stock, now eventually they are cutting down, and it is very much possible it can take out the 1-year resistance of 1450 convincingly now. It can move towards 1540, 1550. If you look at July 2018, it had hit this level of 1450, and since then it has not been able to take it out. So my sense is this time, looking at this short-term pattern of short covering, it can take out this, and eventually another 100 rupees is there on the cards on the higher side. Another one is Wipro. Now Wipro, if you look at the other technology stocks right now, in that comparison, it is looking much resilient. And yesterday also we saw the closing near 375. So my sense is it another 20 rupees. That means towards 394, 395 it is going to hit. In this particular series also it is possible, because if you see the open interest, which is around 31 million shares, it is still 10% lower when the stock was there last time at 330. So my sense is, despite the long positions being added up, the open interest is still not very much alarming. The leverage is still low. So there is a room for further additions of long positions in the stock, which can take it much higher from these levels. So my sense is, even at these levels, one can be the buyer in the stock. So overall, from the IT pack, this remains one of the top pick for us for this particular series.
Okay, all right, Amit. Thanks very much for giving us those F&O trades for the day. We need to take a very quick break right now with a reminder that Asia is positive, as is the SGX Nifty. We'll come back with some more conversations and analyze more numbers. Also, the pre-open rates will be here.